last time I posted a video here was over a year ago, but I'm back now and I'm looking to fix that. The plan is for the rest of the year I'm going to at least upload 2 videos every other week. Right, there is a lot I've learned in the past month, and I'm hoping I can share all of that with you guys here on YouTube. So without any further ado, let me go straight to today's topic. So today I want to show you guys how I now look for my directional bias. So how you can get your directional bias on any forex instrument or any market whatsoever. So this same strategy work on crypto, on forex, on synthetic indices. It works across every market. The market moves majorly in 2 ways. I believe if you've been trading for a few months, even a month or a few weeks, you must have seen this, that the market moves in a structured pattern. So it gives us a high trend, or a uptrend rather, and then it gives us a downtrend. So those are the 2 ways the market moves, majorly on an uptrend or a downtrend. Now for you to identify a trend, be it up or down, there must be a break of structures. So for a bullish trend, you want to see break of structures to the upside. So when there is a break of structure to the upside, you can actually say that's a trend, especially when 1-2 structures have been broken. Now for a bullish trend, it keeps creating new highs. Okay, now I don't want this to be too basic, so I'm just going to skip some things. Right, so this is a high, and then once this high is broken, you expect a new high to be created. After that, you expect a new high to be created. So the market will keep creating new highs as long as it's on an uptrend. Now the moment that changes and the low of the previous high is broken, then you know that there is now a shift in market structure. The market is now changing its structure to the downside. Now this is the basic way the market moves. All right, this is the basic way the market moves. For a downtrend, it's just the opposite. So it creates lows, breaks the lows, and keeps breaking lows. The moment the low becomes protected and a high is broken, then it's now a shift. You now know that the trend has shifted from a bearish trend in this case to a bullish trend. All right, so basically there are 2 major trends, and then if the market is not trending, the market is basically consolidating. Now that we have this out of the way, how do you now identify your trend? I like using the daily charts and the 4-hour chart. Sometimes I go to the weekly, but very sparingly, or majorly daily and 4-hour. Now what am I looking for on the daily or the 4-hour chart? I'm basically looking for a range, a trading range. Now just to add a little more to what I explained earlier, when the market moves, say it's on a bullish trend like this, the market doesn't just react on random zones. It always reacts on either a breaker block on the higher time frame or another block on the higher time frame. What do I mean by that? So assuming this is a break of structure, like so, there's a break of structure here on the daily chart, for example. Right, there's a break of structure here on the daily chart. What you expect is that there should be either a breaker block or another block to the left, this way, for the market to react on, come down, then mitigate another higher time frame POI here before the buy continues. Now one thing I also like to do is to use my ray line to identify the range. So this could be my range, my trading range, and then I can have my feed tool just to get the midpoint. So I can do this and get the midpoint. So what this tells me is that most times the POIs that are above this midpoint might not hold. So that's the higher time frame POIs that are below this midpoint have a high tendency or high probability to play out. All right, so I don't always use this, but most times this actually can be like an extra guide, just to remind you that, hey, if there's a POI at the top, that POI might not play out. Okay, now this is the basic structure you want to see. When the market does this at the top, you can now go to a lower time frame, look for your entry model. All right, look for your entry model and take your sell to the point where it gets to the POI you want to buy from, and wait for your entry model on the higher time frame down here and take your buy to take out this high and create a new high, so the uptrend continues. So this is basically what you're expecting to see on a bullish market. However, when the market moves like this on a higher time frame, say the daily or the 4-hour, it doesn't just move on a straight line. So what that means is on a lower time frame, say the 1 hour, if this is a daily chart, for example, then on the 4-hour, 1 hour, 2 hours, you would find trend forming on those lower time frame. You'll find trend forming like so. So how do you now get your entries? You get your entries when those lower time frame trend shift in character, gives you inducement, and then you take the POI closest to the inducement for a buy to the upside. So in summary, what I'm saying here is this market will always move in trends. So if this market is coming down, for example, let's even say as it's going up right here, it's going to be giving you trends on the lower time frame, 1 hour, 30 minutes, 15 minutes. You're going to be seeing trends. So when it gets to the POI towards the left on the higher time frame, you want to wait for a shift in market structure on those POI, your inducement, and then you take your trade from the closest POI to the inducement. Take your sell all the way down. Even as the sell is coming down, it's still going to be forming structures on the lower time frame until it gets to the POI you want to buy from. You wait for a shift in market structure, an inducement. You wait for your POI closest to the inducement, be it a breaker block or an order block. Take your buy to the upside. So this is basically what you do repeatedly. And this strategy is a very beautiful strategy. It works like magic. Once you can stay patient, follow your higher time frame structures, chances are you're going to make a lot of money from this strategy. All right, so without any further ado, let me just go to the chart and show you a trade on the BTC chart. So there was a beautiful trade on BTC, a sell and a buy, just exactly what I just explained right here. All right, now let's start from the daily. I think I'm just going to clear the chart. Let me clear the chart. There were 2 trades. I think one of those trades is still on the chart. Now this is a buy that happened yesterday. All right, today is Tuesday, so this trade happened on Monday yesterday, and you know the TP was smashed just by 12 p.m. on Monday. So it was a beautiful trade. It happened within 1 day. So from around 6:30 a.m. to about 12 noon on Monday, TP was already smashed. Let's see how many 4-hour candles. So basically 1, 2, 3, 4, 5, about that. All right, and the TP was smashed. So let me show you how this trade played out. This is exactly what I just explained, but I'm just going to clear the chart and start this process from my daily chart. So on the daily chart, what can I see? If I begin from here, I can see that the market created a break of structure like so. There was a break of structure here on the daily chart. That's the first break of structure I see, and then the next break of structure happened just above here. That's another break of structure. Now what's my range? My trading range would be this low, all right, and this high up there. So I go towards my left to see if there is any reaction zone, and I can see that the market is reacting from this zone right there. So that's my reaction zone. Now I'm done with my daily time frame. Okay, now if I want to actually add something extra, I can just say let me add my midpoint by using my Fibonacci tool from the top to the bottom, then I get my midpoint. But like I said, most times I don't use it. I just use eye gauge, and my eyes can tell me that okay, that's the midpoint and whatnot. Okay, so now I can just adjust this on my 4-hour time frame. Now I adjust that, my break of structure, just adjust it a bit more like so. This is my lowest point and this is my highest point. So this is the range. So what that means is I can take a sell from the top up there all the way to this 4-hour zone where I'm expecting a reaction to happen from. All right, I'm expecting a reaction to happen from there, or I'm actually expecting a reaction to happen somewhere around there. All right, somewhere around here. So I can go to the lower time frame to see if there is a POI maybe on the 2 hours, on the 1 hour that the market could react from. But for now, this would be my first point of reaction. So if I'm taking any sell at the top, I'm going to be exiting that sell from this POI. All right, so that's the first thing. And then when the market comes to this zone, I can now look for a buy. So I took the sell from the top and took the buy from the bottom. Now let's adjust this a bit more on the 4-hour and just refine this zone. So I can refine this zone to the top right there, and it will look cleaner. So yes, this is cleaner now. You can still see that there is a mitigation at the top here, and then we are expecting the market to drop all the way down before we buy. Okay, now I'm also conscious that because the market is reacting on this daily zone at the top here, that means the trend might be getting ready to change. What does that mean? It's possible, I won't be surprised if the market comes all the way down and takes out this low to begin a new trend to the downside. That's a very huge possibility. All right, and why is that a possibility? That's because the market is reacting on a daily zone at the top. So the market always moves from zone to zones. All right, so it's reacting on a daily zone at the top. So there's a high chance that the market might just react from there and all the way down create a new structure. But before that happens, we are just going to trade what we see. Okay, now the market is on this zone. I always like to use my 15 minutes. So on the 15 minutes, I want to see what the market was doing before it got to this zone at the top. All right, that's for me to take my sell to buy. Okay, now I'm looking at this zone at the top. I know that my overall bias is a buy. However, I can see an opportunity to sell, so I'm not going to just overlook that opportunity to sell. Now, what was the market doing before it got to that zone? The market was creating bullish structures on the 15 minutes. All right, just creating bullish structures on the 15 minutes. I can see that right here. Created a low, a high, a low, a high, a low, and then it broke the high. So this is now a confirmed shift in market structure. All right, this is a confirmed shift in market structure, so I can take my sell from the top there. Now, but I don't just take my sell. I need to see a few things before I take my sell. All right, so I'm just going to delete this. So this is now a clear shift in market structure, like so. So if there is a shift in market structure, what do we expect? We expect an inducement, and then we want to trade off the other block or the breaker block closest to the inducement. Now, but I can't see an inducement here, but I can see two things. I can see a breaker block, but I can't see an inducement. So what I do at this point is to go to a lower time frame, in this case a 5 minutes, to look for my inducement to see if it's going to be clearer there. So on the 5 minutes, I want to check and see, is there a clearer inducement here? And boom, there is no clear inducement. So this trade idea does not work for me at this point. So I go back to the 15 minutes. I can see that there was a market structure shift, but there's no inducement. So I continue to follow the trend like that. So what was the market now doing from that point? The market kept creating structures. So from this top, like so, broke the structure to the upside, created another low, all right, a high, another low, a high, another low. So at this point, I can actually see a structure I want to actually trade from, and it's around this zone right here. Now let's break that down and see how we find a trade from that zone. Okay, now I'm just going to move this away or delete this, and we begin to map out our structures like so. There was a structure right there, there was another one right here. So as the market was doing all of this, it was creating highs and lows. So this would be the high, this would be the low, all right, this would be another high, and this would be the low. Now I want to pay attention to the internal structure within this zone. So I can see that there are internal structures forming as well in here. So this is an internal structure like so. When the market came down, took out this low, there was a trade idea up there. Now what's the trade idea? Let's explain this again. Now this would be the internal structure shift. All right, this would be my internal structure shift, and this would now be my inducement right here. So I have an inducement right there. All right, this will be my inducement. And what's the trade idea? This will be the trade idea. You can just cover the entirety of this low so you don't miss out on the trade. Okay, so you can cover the entirety of that low, but the ideal thing to do would be to just trade off this. But like I said, if you don't want to miss out on the trade, because if you trade from this body of the candle, most times you miss out on the trade. But if you don't want to miss out on the trade, you can just cover the entirety of the candle, including the wicks. All right, so that's the trade idea right there. You take your sell right there, and then you put your stop loss just above this zone. Okay, something like so. I always like to round up my stop loss to the closest whole number, so I'll just take this from 14.294. I'll just change that to 14. All right, 14,000.23, and boom, that's it. So that's the trade idea right there. I'll sell following the internal market structures, and then we're going to be targeting this low right here. This liquidity down here will be the target. So that was a 16% trade. That was a 16% trade. All right, target that liquidity down there. Assuming the market does whatever it does, stops me out, I would know that yes, it's a valid trade. I was trying to trade the pullback before I take the buy. So that was the pullback trade. All right, and that was a decent 1:16 trades. So let's now talk about the buy. All right, I hope you're following and you can see exactly how I broke this down in details. Now let's look at the buy that I took. I don't know if I still have a screenshot for this, but I think I still have a screenshot for the buy. I'm just going to show that to you. Now let's look at this zone right here. remember on the 4-hour we were expecting the market to come all the way down there. So at this point, I'm just going to delete this. Let's look at the 4-hour again. So at the market, as the market got to this 4-hour zone, we will look for a trade idea to take a buy from there. So let's go to the 15 minutes. And what's the trade idea we are looking for? We are looking for the market to give us structures to the upside, to the downside, and all of that. So how was the market approaching that zone? It was approaching the zone, creating structures like so. So let's even start from here. There was a high, there was a low, another high. I can consider this a low, a high, and then a low, and then there was a shift in market structure right there. All right. So this was another beautiful trade idea that didn't actually go all the way to take profit. Now, how does this trade play out? Let's see. This is now a shift in market structure right there. All right, that was a shift in market structure. After the shift in market structure, what would be our inducement? The first pullback after a market structure shift or after a break of structure. So that would be the inducement up there. After the inducement, what would now be the POI you want to trade off? This would be the POI right there. Now, if you extend this POI towards the left, you can see that it also laps on this, but this is not really a solid structure. So I'll just stick with this one, and then you can take your buy from this zone. You can take your buy from this zone. Okay, take your buy from that zone, and the target would be the high. All right, I always want to go to the 4-hour to check for a liquidity zone that I can take my profit from. So in this case, the liquidity zone will be at the top right there. Okay, so 24% trade, but as you can see, that trade did not play out. That trade did not play out. Market came down, tapped into the position, went up a bit, and boom, smashed top loss. All right, you win some, you lose some. Now this is now the next zone. I think we got this one on the 1-hour. So if you go on the 1-hour, you can see that this is another zone the market came down to. So at this point, we are expecting the market to give us another structure for a continued buy. So what can we see here? We can see the market creating structures again to the downside. Let me just delete this. Now, these are the structures we see: a low, a high, a low, another high. I can't even draw this. Let me delete this and start the process again. So from this point, a low, a high, another low. Okay, a high, a low here, a high, sweep of liquidity down there, so a low, and then market structure shift like so. Okay, so I'm just going to delete that. Now let's see our market structure shift. It happened right there. That was a market structure shift. After the market structure shift, we can now see our inducement. First pullback after a market structure shift, after a break of structure. So that's our inducement. After the inducement, we can clearly see that we have a breaker block POI there. So that's our entry, that's our breaker block. We take the entry from there, set our entry, our buy stop limit from that zone. Stop loss just below there. I think I used the 14 pips for this one. Just adjust that a bit, and then we can have this to the nearest whole number, 14,000. I believe so. That's correct. Okay, 14,000, and boom. So that was the trade idea. I think this was a 14% trade as well. Now on the 4-hour, we want to see our potential take profit zone. So the nearest drawn liquidity would be this high right there. All right, this high right there was the nearest draw on liquidity. So we go back to the 30 minutes, and boom, what did the market do? Came to the take profit, smashed it like no man's business. So this trade was yesterday, Monday, right, from 6:30 p.m. a.m. thereabout. And so these are the two trade ideas. Now, what am I expecting BTC to do? Like I said, because price is reacting on this zone right there, what BTC can do is, you can see that there is also an internal market structure shift on the 4-hour. There's an internal market structure shift right here. So the market can come to this high here and react and come all the way down. But the major expectation is that this high will be taken out. All right, this high will definitely be taken out. Now, when am I going to get involved if I want to take a sell from this market? I'm going to be waiting for this to happen. I can see that the market is already creating 4-hour structures. You can see from here, there's a 4-hour structure that is forming like this. All right, a shift to the upside, like so. So if the market does this, create a shift down here again and give me a structure, I could look for sales, because like I said, the market is coming from a daily zone at the top here. So there's a chance that this lower zone here might be broken. There's a high chance that this zone might be broken. But like I said also, the current trend shows that BTC is on the buy. Okay, so three trades right here. We have the first trade here for a sell, 1:16 profits. Second trade here for a buy. We took a loss on this one. I normally break even, but I'll always break even after a 4-hour candle has given me a proper break. So this 4-hour candle showed weak, and then I didn't break even. So at the end of the day, came back and smashed me out. So this was the next trade here. From this point, market came. So 3 trades, 1 loss, 2 wins, and beautiful trade. So I shared, I think this second trade was shared on my Telegram channel. All right, so at this point, this trade was shared here. You can see this was the entry and this was the TP on my channel. So I'm going to share the link to this Telegram channel on the description of this video, so you can join this Telegram channel so you don't miss out on my trades. I'm also looking at doing like weekly trade recaps or weekly projection of the market. You know, every Saturday we'll do like a trade recap and do like a review or a preview for the next week. So if you're interested in things like this, you might want to smash the like button, subscribe to this YouTube channel, and join my Telegram channel. It's a new beginning, guys. I'm not going anywhere anymore. I'm here. I'm fully ready for this year. The goal is to actually get funded $1 million in funding. I already have some funding with Funded Next, and I'm looking to max out FTMO funding peeps, but I'm going to show you guys all of that as we proceed on this journey. All right, see you on the next one. Peace.